Hey guys, my name is Patel and welcome back to my channel Patel in Canada. TFSA or tax-free savings account is one of the best options for Canadians to save and invest their money by paying zero taxes on the profit. Over the time, the investment grows based on the compounding interest. However, there are some common mistakes people make when they invest in their TFSA. So here I will discuss top 15 most common mistakes to avoid and ensure you are taking maximum advantage of this popular investment vehicle. I hope you will find this video valuable, so don't forget to like the video and subscribe to my channel. To make the video in shorter length, I have made two parts. This is the first part of the video and you can watch the second part of the video by clicking the link mentioned in the description. So let's start with the mistake number 1. Do not consider TFSA as saving account. I have seen many people who misunderstand the TFSA as normal saving account and therefore they keep cash and GICs in their TFSA and withdraw whenever they need the money. So if you are doing the same, then stop it. TFSA is an investment account where you can hold many types of investments like stocks, bond, ETF, mutual fund, and so on. TFSA is more flexible than RRSP, but you should consider it just as important as the RRSP for retirement savings. You can hold cash in your TFSA if your purpose is to use it as an emergency fund, but it will provide you good return in case of long-term investment. Mistake number 2. Avoid being too risk-averse. So, after knowing that you can hold many types of investment in TFSA and your TFSA is still holding 100% cash and GICs, for example, then your portfolio is deemed to be highly conservative. A conservative portfolio makes sense if you are saving for a short-term goal or you are very close to your retirement age. But let's say if you are saving towards a retirement which is 10 years or more in the future, then you need to take on more risk if you want to grow your money. Mistake number 3. Do not over-contribute to your TFSA. Every year, Canada Revenue Agency announces the TFSA contribution limit for the year. You are allowed to contribute this amount plus any unused contribution room carried forward from previous years. Just for your information, TFSA contribution room for 2023 is $6,500 and it was $6,000 in 2022. So if you over contribute in your TFSA, then all the excess contributions will be penalized at 1% per month. For example, let's say you have over contributed $1,000 in January. So if you do not withdraw it until the end of the year, you will pay $120 in taxes as penalty. Most of the people do not keep the record of their contributions and withdrawals and therefore they end up paying the penalty. Therefore, I recommend you to keep the record for each contribution and withdrawals. Another point to remember here is if you withdraw money from the TFSA account, then you can recontribute the same amount in the next year. Mistake number 4. Do not cash transfer of TFSA to another institution. Many people keep cash in their TFSA. So, if you withdraw cash from your TFSA and transfer it to another TFSA, then it is considered as a contribution and may result in over-contribution with corresponding tax penalties. To avoid this penalty, the best way to move your TFSA from one bank to another is to do a direct transfer using Form T2033. You can also talk to your bank and they will guide you through the process. Number 5. Do not hold foreign dividend stocks such as US stocks. So, if you are holding foreign dividend stocks including US dividends in your TFSA, then you are subjected to a withholding tax. For US stocks, the withholding tax is 15% and it is not recoverable. So, to avoid withholding tax issue, the best way is you can hold US stocks maybe in RRSP or non-registered investment accounts where you don't have to pay withholding taxes. Mistake number 6. Do not contribute if you are non-resident of Canada. You should avoid making TFSA contributions if you are non-resident of Canada because of the penalty rule. Let's say you are non-resident and contributed a couple of $1,000s in TFSA. So, in this case, you have to pay 1% monthly tax, and this penalty continues until you withdraw the amount and submit relevant forms or you become Canadian resident. Mistake number 7. Avoid actively trading within the TFSA. So, if you day trade securities within your TFSA, then the CRA may consider this business activity and you have to pay capital gain tax on the profit. Furthermore, dividends and interest income are also taxed at your marginal rate. There are no specific trading limits provided by CRA for TFSA trading account, but my point here is be careful about high frequency trading. So that's all for today, and just to remind you that this is the part 1 of the video. I will upload the part 2 of this video series next week, so make sure that you subscribe to my channel so that you can get notifications for my new video uploads. I hope you have received great information from this video, so don't forget to like and share the video. Thank you again, and I will see you guys in my next video. Until then, see you and goodbye.